shares of the Scotts Miracle-Gro company fallen today. That's following mixed results on their second quarter earnings. We're joined now by Jim Hagedorn, Scotts Miracle-Gro company chairman and CEO. Great to see you, sir, here on set.
Hi.
Let's get right to this report.
I don't
Jim.
think it was a mixed, report.
Well, I want you to respond to this because the stock, we're under some pressure here. It did look like you reported Q2 sales that maybe missed consensus, Jim, but I want you to walk us through this report. I want you to explain to us what you're seeing in the business.
Business is fantastic. I mean, our point of sale, which is our sales to consumer at retail, are, I think right now, I think we reported for the first half like plus 12.1. Today, it's over 14% ahead of last year in actual POS units to consumer. We affirmed guidance on sales. And so I don't know what, I can either blame the street for completely not getting it or say I must be the worst storyteller in the world, where we reaffirm guidance. We are beating all of our financial metrics. Sales were, if you exclude some one-time sales as we sold some excess inventory last year and discontinued one business, sales were flat. But the first half of the year is nothing but load in to the retailers. And so what really matters is replenishment. 60% of our sales happen in the second half of the year. And so, just in the last 2 days, like the POS that I got up, our complete sales data was up, I don't know, almost 1.5 points just in 2 days. This is the weather that you guys are complaining about with allergies.
Well, it's a blessing and a curse.
No, exactly. But it is gardening season hardcore, and business is great. And so I have to say I was a bit disappointed, which is we thought this is a blowout sales report. The consensus numbers were not our numbers anyway. We don't provide, quarterly sales guidance. So it was somebody else's numbers, and it's not a number that we managed to. I mean, we're basically managing toward consumer takeaway, then it's a view of kind of where we think we'll end the year inventory-wise at our biggest retailers. And that's actually a good story for us. So when you hear about like Black & Decker and, Stanley Works and other guys who legitimately, I think, have issues, we don't have any tariff issues. Our biggest import is peat moss, which is exempt from tariffs. We don't have any pressure in this year, or put it this way, so minor that we're not changing our outlook at all. So retailers are trying to look, think about this from a retailer point of view. If everything is costing twice as much and they're trying to protect their balance sheet, and look at like lawn and garden tends to phase into Halloween. Almost all that is Chinese imports. And so what you're seeing is a real opportunity for them to buy less Halloween stuff and extend the lawn and garden season, which is something we really like, because it's kind of artificial where they're getting out in the fall to get set up for their fall business.
Well, let me ask you this. From what I gleaned from your conference call, some of that retail sell-through is being driven by promotions, which you're not paying for, the retailers.
No, we're paying for it.
You are paying for it. I didn't know if the retailers were sort of subsidizing some of that from what I was trying
They
to...
do.
Okay. So I guess what I'm curious about is if they are feeling the tariff pinch in other areas, are they going to be trying to not offer as many promotions on your products?
No, what's happening right now is retailers coming out of COVID, people bought cabinetry and all the sort of expensive sort of hard goods and barbecue grills, lawnmowers, everything that people bought when they were home. And that's been a big problem. So their customers arriving at retail, is down. So there's a major push for market share and to attract consumers. And so they're very promotionally oriented, so that this is working out sort of fantastic for us. So no, there's no shyness about promotion. Promotion is a very major tool for them to bring customers in the store. I don't know if you saw that article about Depot in the Wall Street Journal, their $20 billion secret garden is what they called it. It's one of the biggest categories that they have in the entire chain, and we are the biggest vendor in that category. So our brands are super huge, Ortho, Roundup, Miracle-Gro, Scotts. right now. We're the biggest vendor in the chain right now. And so lawn and garden good is great for us, and promotion is, I think all the retailers are trying to get people into the store. And so it's very competitive out there right now.
Jim, let me ask you, we got some economic data this morning. Reports show GDP shrank. To the extent that we see an economic slowdown, there's a lot of smart economists that come on the show, tell me the odds of recession went up. What could all that mean for your business?
Traditionally, that's not much. Remember, our people are homeowners, so they're not the bottom end of the sort of economic scale. So we're dealing with the top sort of people anyway, is people who own their own homes. And so we have not seen a lot of that. And what's happening right now is we, last year, had a 9% increase in consumer takeaway. This year so far, we're talking 14%. During COVID, sales went up over 30%. So this is, what do we think? Consumers love the garden. What are we doing? We're promoting harder. We're working with the retailers harder to bring customers into the store, and it's working out pretty fantastic. This is why we're a little bit like, we affirm sales guidance, we affirm earnings guidance. We're beating all of our metrics on margin, gross margin up 500 basis points. It's just all these things we've been working on as we kind of are getting out of trouble post-COVID. And I don't know, we thought people would applaud it, and people got stuck on this supposed sales miss when it's not a number that we manage to. We're really managing right now to consumer sales, and as long as inventory right now is, I don't know, maybe sales up, call it 14% today, year to date. Inventory up like maybe 3%. So I think inventory is in really good shape. And a tailwind, which is retailers saying, hey, do you want to do some more stuff in the fall?
Jim, real quick, I want to ask about the cannabis business, which you guys got into, and you've mostly separated it out from your core business here. But I thought it was really striking. You sort of directly addressed President Trump on the conference call, and he said, he's obviously been very busy doing a lot of other stuff. You would think maybe he could find some time for this particular measure. What did you say to him, and why is it so important for that business?
Well, he said that he supports rescheduling.
Right.
The biggest issue with the pot business, and it's what's really terrible, this is a business that's bigger than the beer industry. It's bigger than distilled alcohol, okay? So, the legal business alone is north of $40 billion. And the tax rate, because it's federally legal, is a Schedule I narcotic, which makes 0 sense since it's legal in some version or other in every state other than Kansas and Idaho. The tax rate is effectively 80%. You cannot deduct any of your business expenses. So your top line revenue is your taxable income. And so it's gotten to the point where nobody can make money. Anybody who's paying that 280E, that's a section of the IRS code, anybody who's paying that cannot make money. And I think people were willing to put risk capital in before, like 4 or 5 years ago. Today, everybody's been burned. Nobody's putting capital in. The business is in the worst shape ever. That's really what you're seeing on Hawthorne. And we're moving out just because it's not worth the hassle. And I think a lot of our investors we love the lawn and garden business. We love your industry. Why do you gotta have this beta in your stock because of cannabis?
Yep.
But the cannabis business, the president is the only guy, and I've told him this, he's the only guy that can fix this, because what he needs to tell the guy I think was in a hearing in the Senate today, the new DEA chief, is you recognize my voice? I made a promise that we're going to reschedule and we're going to support it. And you need to do that. And so that's what has to happen, is the DEA has to follow the HHS recommendation, which they have always done, to reschedule, and that solves the tax problem, and then this business can make money again.
Jim, great to see you. Great to have you on this set. Thank you for joining us.
Thank you, guys. Thank you.